Welcome to another episode of Tom's Takes. Today I'll be talking about IEP. That's Carl Icahn's company. They reported last Wednesday, and this one, I don't want to get triggered because I've lost a lot of money on this, or it's actually just a paper loss because I haven't sold. And right now I'm currently getting drenched. I need to set up my home office. Um, it came down, it was pouring for about an hour. It stopped raining, but I'm under a tree, so every time the wind blows, I get drenched a little bit. But last Wednesday, Carl Icahn's company, IEP, they reported earnings. I don't want to get into necessarily the all the details of the earnings. The video is not necessarily about that. It's a lesson that I learned, and it's kind of hard to decipher his earnings. IEP, they're a conglomerate. They own so many different companies. They're involved in a lot of industries that aren't necessarily correlated. They're in investments, energy, automotive, food packaging, real estate, home fashion, pharma. Carl Icahn, if you guys don't know who that is, he's a legendary investor. He was very much known as an activist investor in the 80s and 90s. He was really, really hot. If you ever seen the movie Wall Street, Gordon Gekko, Carl Icahn, he was one of the inspirations for that character. And what in the movie Wall Street, Gordon Gekko, he bought an airlines and he stripped it, and he made a lot of money off it. And Carl Icahn kind of did the same thing. I do apologize. I saw Wall Street, but it was a couple of years ago. I think that's what he was planning on doing, but I think Charlie Sheen character thwarted him. But nevertheless, that's not my point. What I want to talk to you about is back in March or April of 2023, I had about $26,000 in my E-Trade account. I took an absolute beating. I had about $72,000 in there, and it went all the way down to about 26,000. And I lost most of it on two stocks. One of it was Pennsylvania PEI. They were a real estate company that owned a lot of malls, and I lost my shirt on that. And then I lost a lot of money on PaySafe, and they were in financial. They offer financial services for a lot of the online betting apps. So I thought I was gonna catch a trend and I would make some money off that. But both those wound up just. PEI, I think, went bankrupt, and PaySafe, they still trade, but they lost a lot of value. I almost bought it and went down almost immediately. So around that time, my brother passed away in February of 2023, and prior to him passing, I actually bought some plane tickets to go to Tampa with a couple friends, and I was going in March, and I thought to myself, do I go? I didn't want to leave my mom alone for like a month. It was towards the end of March, but she said, "Hey, listen, you've gone through a stressful time as well, and you already paid for the tickets, and go have fun. I mean, just enjoy yourself." So I went down there, and I was kind of I was a little bit short on cash. So back then, IEP, they're paying a dividend of $2 a share, and so what I did is they pay $2 every quarter. And I thought I would be smart. It was trading around $50 in the $50 range for a couple of years. So I wound up buying 500 shares right around when the dividend was getting paid. So I thought to myself, okay, what I'll do is I'll pay for the trip, I'll catch the dividend, I'll sell it, and then I'll have $1,000 waiting for me to use to pay off my credit card. And I'm like, and worst case scenario, I thought, even if I don't sell right away, I wouldn't mind holding it. You know, every 3 quarters I get $1,000. You know, that's something that I found very attractive. What wound up happening though is I held on to it a couple weeks, and then this company called Hindenburg, they put out a short report. I don't know if it's called a short report, but they are a company that shorts a lot of companies. You could go a long company where you hope the stock price appreciates, or you short a company where you make money by the stock price going down. And they put a report out on IEP, and that stock got hit badly quickly. I think the day that it came out, May 2nd, 2023, I think it like went down like $5 right away. I should have sold it then, but I didn't want to take the loss. I'm like, okay, don't panic sell. I read the Hindenburg report, and I read it, and it actually made a lot of sense. They said that the IEP, the NAV, which is the net asset value, was overvalued. The stock was trading at a very high premium, and Hindenburg was saying that the private assets, they own companies, and it's kind of almost set up like Warren Buffett's company, where they have companies, private companies that generate income, and Carl Icahn uses that money to pay for his stocks and other investments. So, but they were saying that the private businesses that he had were way overvalued. I think they overvalued it by 318%, and I read it, and it kind of made sense, because IEP was losing money almost every quarter. So how much of a premium are you going to give on private companies that aren't necessarily making money on a consistent basis? And they said that the dividend was unsustainable. It was paying a massive dividend, $2 a share. So it's $8 per year on a stock that was trading at like 50 and change. So it was almost like a 15% dividend. And when you look at it, in order to cover the dividend with your cash flow, it was paying out $2. You should at least have $4 of income coming in to pay it, but yet they were reporting a loss. So they said that the stock was, the dividend was a Ponzi scheme, Ponzi-like scheme. And I read that, and that actually made a lot of sense. And the report also said that Carl Icahn, his investments weren't doing well, and he had a lot of dogs in that company. One of them that stuck out was Xerox. I couldn't believe he had so many shares of Xerox. He wound up selling it, but he owned a lot of stocks that just, a lot of companies that just did not make a lot of sense. It didn't seem like companies that generate a lot of money or had a lot of had a future where you could predict that the stock price would appreciate. He had a large position in Newell Rubbermaid. I think they make those like plastic canisters. So I'm very confused as to how he decided on all these companies. And then it also mentioned that he had billions of dollars in personal loans, margin loans attached to a stock price, and the stock price was just getting hammered and hammered and hammered. So if it got below a certain threshold, a certain price, he would have to sell his stock in order to pay off the margin loans. But with all that forced selling, that would cause the stock to collapse. It wound up collapsing as is. It was traded. I bought it in the 50s, and it went all the way down. Right now, it's close to its all-time low, and it's been hanging out there for about a year or so. The all-time low was $7 and change, like 701 or 702, and currently it's at like 748 or something. So it really did a round trip. The high was about 128, and then it crashed, and then it kind of had a little bit of a lift to like 105 or 106, and then went down in the 50s and stood there for a while, and I picked it up, and then it wound up crashing. So right now I put like $26,000 of all the money I had in there in regards to not my 401k or anything. That was just like my personal savings, and my principal right now is about $37,500, and I'm not including the dividends. The dividends is still very high. He wound up cutting it twice. He cut it down from $2 to $1 to 50 cents. So which it pays $2 annually, and that comes down to about over 25%, which is also, I find, very unsustainable. But he reported last Wednesday, and he still is paying that. And I just want to say a couple things. I bought IEP for all the wrong reasons. I bought it because of the high dividend, which a lot of retail investors They also bought IEP for the high dividend, and also they bought it for Carl Icahn. He's a legendary investor, and they thought that if anyone could run money and make money, it would be him. But he's really lost his touch over the years. He came from a relatively modest background and became a multi billionaire. But at the same time, you're only as good as your last sales, and that stock has just been hammered for the last 15 years, and he's in his like 90s. I can't say for sure, but I almost want to think that maybe it might just be his age. Maybe he's not as sharp as he used to be. Maybe he's not reading the markets like he used to, but he's continually losing money. Currently, I've lost so much money on it, and I just have, in regards to, I just still have 37,500 of my principal, so I'm still holding on to it, and every 3 months it does pay a dividend, so I usually take that and I buy something else with it. But all I want to kind of say is, if you're going to invest, do a couple things that I did not do. I knew better, and yet I got greedy. One, be diversified. That's like rule number one, but at the same time, I put all the money I had into one stock, thinking that it was stable. Two, do your own research. I bought it because I thought Carl Icahn knew how to make money, and I thought he was a sure bet. But at the same time, he's fallible, he's human, and he's been on a very terrible run. There's a lot of hedge fund managers that have blown up their accounts. He won't be the first or last one, so you just need to be careful. And also do your own research on a company. If something looks too good to be true, there's a good chance that it is, and it's not sustainable. I learned that the hard way. Right now I've been stuck in the stock for the last 3+ years. I don't intend to sell it until I make some of it back. In the meantime, I'm collecting the dividends, and I kind of serve as a reminder that the stock market is something that you can lose a lot of money. I got hot for a couple of years, and it was hubris. There was a couple of year period where I went from like 3,500 to 7,200, almost like in a straight line. But at the same time, I went from 7,200 down to under 10,000, also in a much straighter line. So it's something that I learned my lesson. But one thing I'm kind of glad about is right now I didn't use any of my 401k money. I still have that, and I learned a lesson that you can lose money quickly in an investment. So I want to say I'm going to be a little bit more frugal and diversify as much as I can. You might not collect as much on the upside if something goes right, but at the same time you're spreading out your risk, and that's what professional money managers do. They are more concerned about not losing money as opposed to making a quick buck. So other than that, I hope everyone is enjoying their Sunday, and please like, share, subscribe, recommend this to your friends, comment on what I could do to make my channel better, and I'll talk to you soon.